everybody, welcome to Stockradar Stocks on the Move. Today's date is the 27th of July 2021. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, resilience is the one word I'm going to use today. As we know, this market has been incredibly resilient and we're going through a lot of stocks today for you to have a good look and see what's happening in the market. As you know, educating by example is my method of communication. So today we'll work through our two membership options that I cover, so you can see what suits you, how you can build portfolios, and how you can get involved with all this. Okay, so this is certainly, I mentioned resilience as my word this week. This is certainly a make hay while the sun shines period. These market phases are gold. So don't lose perspective. They don't always happen. We've had a couple of tough years before here. We've had a great year this year, and this really is a time where you should be fully equitised at the moment. So I'm going to take you through a few things today that'll hopefully help you. Okay, but first off, we're going to go through what we normally do: overseas markets, ASX 200, Stockradar portfolio, ASX stocks. And I'm going to talk today about the basic versus premium portfolio membership, so I can be pretty clear on what the two sides, two options offer you. Okay, so first we're going straight to the markets. The Dow Jones, again, still kicking higher, no real problem there. It's trying to nudge through this high. It's just trying for another leg higher at the moment. Volume's all okay here. The momentum slowed down a little bit as it went sideways, but all looks fine. Nasdaq, it's a bit stronger. Once again, it's got a little trend up through here. It's broken through the highs there, and volume's been pretty good. Momentum's starting to turn up again. So again, we're still in that same situation where the market is trending, and it's probably going to be higher next week than it is this week, and that's effectively what defines a trend. Okay, so commodities, crude is looking rather strong at the moment still, but it had a little bit of a slowdown as it hits this R1 area, which is a fairly big area. It's had a huge rally this year and last year. It's got to this level here. We've seen some selling activity appearing down here, and also the momentum has slowed down a little bit. So we're having a little battleground at the moment between the uptrend and the buyers and the sellers at this resistance level. So we just have to watch it for the moment. But as always, the trend is your friend, and that is what is the most important part of it. Okay, so that's the trend. That's crude. We can go to copper. It has tried to bounce. Hasn't been successful. It's come back a bit this week, but it's fairly robust. We've had a big uptrend here. It's going to have a correction phase. I don't think it's going to disappear down the gurgler just yet, because we know there's a huge demand out there for copper. So it's just a matter of when this trend's going to reignite itself again. So for the moment, you can see down here, sellers are active, both buyers and sellers. Momentum slowed right down. So if you were long copper, you would just say stand aside and let this happen. Wait till it comes back, and then we get a signal again. So for copper, it looks okay. I'm not going to go through gold. It's just going in nowhere as it lands still. When we get something for you, I will tell you. Okay, so the ASX 200 now. This has been an amazing move. Let's just maximise this and have a good look at this pattern here. So this is at the highs here. Anybody who wants to go and have a look at a monthly chart, it tells a big tale. So I'm not going to show you today. I might show you next week, but it's a very interesting looking long-term pattern. This is the weekly chart, and you can see here, since the COVID crash, we are actually up 52%. So, if you haven't ridden it, and if you're worried about it, then you probably haven't made the most of this opportunity. The market is trending, it's going up. So it's just a matter of following that trend and riding it as fast as you can. So it's still above the average, momentum is okay, it's making new highs, it's above an all-time new high, and it's rallying well. So there's really nothing to concern yourselves with this. We can all talk about the market being high, but it may well go a lot higher. If you look at this rally compared to 2003, 2006, well, I'll let you make up your own mind. But go and have a look at that long-term chart, have a look at that trend, and see where we are now. So it's an interesting situation. So I might look at that for you next week. Okay, now the Stockradar portfolio was down 1 this week to 83. We had 4 out, 3 in this week. We took a bit of profit on a couple of stocks there. The portfolios, the 5-stock portfolio is down to 4 out of 5, and the 10-stock portfolio is down to 9 out of 10. That's because we've accepted the offer for Boral, and we've taken that out. We've taken a 75% profit on that since last September, which is a great addition. So we've just locked that profit in, which is nice. Something new will probably come back in next week, but for the moment, we'll just have to wait and see. So with the portfolios, you've got to wait for one to drop out before you can put another one in. That's about the controlling part of the portfolios. The conservative portfolio is 7 out of 20. Okay, strangely enough, but those 7 stocks are going very, very, very well, and the other 13 stocks, or the other 13 allocations to that portfolio are not losing any money, which is important. Okay, so that's making money in the sectors where you see the banks and industrial materials and property at the top of the trend intensity scale. However, the banks are flirting with a bit of support at the moment. I know the market's been a bit stronger today, but just watch those banks because they've had a big run up and they may have a little correction from here. We don't know yet, but they haven't broken down or anything yet, but certainly worth watching at the moment. And our other little portfolio, which I've been following for you a little bit on the YouTube video, just talking about how to build a portfolio. That portfolio we've been running, it's up about 12% since March. It's all the stocks are positive now, and they'll probably be a bit better again today. Mineral resources up 50%, Independence Gold up 20%. Again, this is not the norm. This is a market that you've got to trade and run and be very strong with, okay, because that's important, okay? So make sure you are in the market when it's going high and trending, just like the ASX 200 is at the moment. Okay, so now I want to get into some stocks for you. We'll just make this size this down, go into some stocks. Now I thought we'd cut off on BHP, and we might have a quick look at that later on because it is looking quite interesting. But first of all, stock I want to go to this week is Metcash, which made a new high not long ago. And this is an interesting stock. Again, we never know what's going to happen. So we watch these stocks, we see a break up here, which is all very nice. We've got good volume, we've got good momentum. It kicked higher. It had an incredibly frustrating period here where it made new highs, came back. Our stop never went off, so we're holding there. And now we're starting to reap the benefits as it makes new highs again. So we had the trend reversal here, we had the new high, it is trending higher, volume has been quite healthy on this move to new highs, and momentum is ticking higher again. So its trend intensity rating is 10. As I said up here, we've had a bumpy ride high, but confidence is building. So although this is a very choppy pattern here, we did survive it, and we're now reaping the benefits. So sometimes patience is rewarded. In fact, often patience is rewarded. Okay, now let's go to Medibank. This is another one that's been a very slow starter, but it's starting to move. It's also trend intensity rating of 10. So it's a nice little trend reversal here. Now, again, we had this downtrend here, it rallied, it came back to a sort of a new low here. It then rallied, and again, here is the clue for a trend reversal. We get a higher low, which is always a big clue that the buyers are coming back into this market. So it then rallied through here. We've got a signal here just above $3. And we had some volume, we had some momentum going through here, and it's now rallying quite well and looks quite strong. The momentum index is quite steady. It's not going crazy, which means this is a nice steady uptrend, and it looks like R1 is certainly a possible objective for this stock, and again, above there is new highs completely, but it's currently trending higher. Trend intensity rating is 10, and it's looking very good. So as you see, these stocks that I'm looking at this week, there are always stocks coming in, always stocks falling out. So you don't need to fall in love with stocks like a Boral. Take your profit when you're told to. Do what you should do, and there'll be new opportunities will come on board. Okay, now as promised, CSL, which I haven't looked at for a long time. It's been a struggle over the last 18 months for CSL, and we're not too sure why. And I don't tend to reason why, I just tend to follow the price action. And we can see here, since we hit a high in February 2020, it came down during COVID, it rallied again, didn't make a new high, came down, tried to rally again, made a lower high again, lower low, and then a lower high again. So this is really not a happy pattern at the moment. So can we break the shackles of this downtrend and challenge the highs? Well, possibly, I don't know, we'll have to wait and see. There's a little bit of buying coming in here without it being amazing. We can see some selling hit this little downtrend period here. Momentum is just ticked above 0, so we're getting a bit of a mixed picture. It's above the average, which is still flat. Remember, I talked about that before, whether it be sloping upwards or sloping sideways. At the moment, it's still flat, and the price is rotating around it, so there's no real trend on that basis there. So there's nearly nothing there, and the price action really is still negative. So to my mind here with CSL, we really need to break above those highs, which is up around 340 or just below 340 before this stock's going to move again, and that would be a really good break. But for the moment, CSL is not on my radar. There are plenty of other health stocks, whether it be Helios, Sonic Health, ResMed, other ones that they're actually making money for us. So trend intensity rating is 0 for CSL. It's a no-no at the moment. Okay, now we looked at Bapcor a few weeks ago. It's been an interesting pattern. I just wanted to show you this because I'm going to show you a couple of charts that are similar sort of pattern here. We've got Bapcor trend intensity rating is 0 at the moment. Okay, we've got it above the average. Volume is okay here, quite encouraging. Momentum is just ticking above 0, but the price is not in an uptrend, so it keeps my trend intensity rating down, unfortunately, because that's the most important part of what I do. So sometimes we just have to be patient. 1, 2, 3 knocks on the door yet to make a break. Now we've got a little bit of a high-low here. I talked about a little bit of a clue before about the high-low. I think it was with Medibank. So it's made a high-low here, which is encouraging, but we're not breaking through yet. So we really have to just wait. So this is a situation where we've had a nice trend. It's gone into a consolidation phase. And we're now looking for a possible trend to start developing again, but we need to get confirmation above this R1 level to actually trigger the positive trend intensity rating and a signal on Bapcor. So that's a wait and see, and it just hasn't done it yet. And it's quite possible the buyers just might give up and go away. I don't know yet, but we'll have to wait and see. So we're neutral on that one there. Okay, so that's Bapcor. The other one I'm going to have a look at, a couple of, I mentioned to you before about the building a portfolio, and luckily we've got a couple of those stocks in there. And one is Mineral Resources, which we've looked at before. It just keeps rallying higher, and I know the market's stronger again, and I think Mineral Resources is up again today. It really has been a lot of short, sharp punches in this one because it is a resource stock and we do get these corrections and sometimes they can be quite deep. And you know I don't like taking losses, so I minimise them, and if I get a new high, I just run with it again. So we've done a stop and protect a couple of times here, but we're still making money, and we're not ever carrying any big drawdowns, which is very, very important because once you start carrying those big drawdowns of 40-50%, then you're on the back foot, and nobody likes that. So I don't do that. So in this situation here, this time we've got a very good break above $40. It's now above $60 in a couple of months, which is fantastic. We've got a new high here. Trend intensity rating is great. Look at this fantastic volume down here. Look at this great momentum. All looking good for Mineral Resources. Trend intensity rating is 10. And IGO, the other one, it also, okay, let's just squeeze this up a little bit. We can see the new high here. Okay, it broke its new highs here. It did have a bit of a choppy period here for a little bit, but our stop didn't go off, and then finally we got this jump again, and you can see the volume expanded nicely, and also momentum's expanded nicely. Now, it did on the break as well, all very good, but this little pattern here was a little bit, it just was a bit choppy here. There was no real selling there. The momentum stayed positive, so it wasn't really a concern, and our stop was quite safe in that period. It's above the moving average, and then finally we got the buyers came in and swamped the sellers, and that's what's happening at the moment. So that's one or two of our portfolio stocks, Mineral Resources Independence Group, in the new portfolio that I built since early March with you guys. Okay, so the last, there's two more stocks I want to have a look at. One is car sales. Now it's had a tough time, a bit like we looked at Bapcor before we saw this trend. For Bapcor, we saw the consolidation phase, and now is it developing a new trend? We wait for a trend to occur, to develop, and once we get a signal, then we can jump on board. So for car sales, we have a trend, we have our corrective phase, we're now going up, we get some great volume, momentum is starting to appear. All I really need is for this to break here, this high here, and that will confirm to me that this trend is intact and is worth following. Okay? Set my stop, follow the trend, and that's how it works. Okay? So car sales is maybe right for a rally. It's certainly looking good down here. The buyers are back, and momentum is very good, and this is now starting to turn up, which is good, the moving average. Okay? So that's car sales, which I think is looking pretty good. Now, I'm going to go through a couple of stocks over the next week or two, just some opportunities, because I know there's been a lot of stocks running on well, but there's also some opportunities which we always look for to try and get on some buy. There's plenty of buy and weakness traders out there. Some people like to buy momentum, so they follow momentum higher and have no problem with it. A lot of people do have a problem buying new highs, but that's fine. And they like to buy on weakness. They like to feel safe. So Horizon is an interesting stock. I know probably fundamentally I don't think that anyone's really that hot on it at the moment, but that doesn't bother me. I'm only looking at the price action. And if I look at Horizon at the moment, the trend intensity rating has snuck up to -4. Now, why has that happened? Okay, firstly, we had the COVID crash. It rallied, it came back here, and it's finding support down here at this $3.60 level quite nicely, okay? Okay, so this is a typical basic structure I'm going to go through, and the evidence builds slowly for these buy and weakness patterns as the confidence swings from the sellers, or control swings from the sellers, a basing pattern, and the buyers get confidence and they rally it again. So what's happening here is we can see firstly the XMA, or the moving average, starts to turn flat, which is starting to down here. It's been very well down, now starting to turn flat. Okay, that's the first point. Volume becomes more active as buyers get involved. I'll squeeze this up a little bit. So you can see in here now there's a little bit more of a heated debate going on here, which means the sellers aren't in control anymore. There's people nibbling away and the buyers in there. So that's a good thing, they're getting involved. The MACD will also start to draw back to zero as this downtrend starts to dissipate. So that's just part of the puzzle that we're trying to build here. Okay, so this is coming back towards zero. It's quite close actually now. And the last one is here. I've got downtrend starts to erode. So this downtrend here, which is firmly in place for over a year, is now starting to erode. The stock's not going down anymore. It's found support and we're getting some buying interest. Downside momentum's gone out of it. So it's an interesting situation. The next step is then to build a trigger as to where this might reverse. This might, where the sellers might decide they've had enough, and the control really starts to swing from those sellers to the buyers. And this point here, up around $4, is the one I've isolated. This has got two highs here, excuse me, and we've now started to approach it again. So we've sort of got a mini trend reversal here with a high low, but it's not been qualified by the trend intensity rating. But all these signs are encouraging because what I'm looking at primarily is the price action. And that's the most important thing. The price action to me here is saying this has stopped going down. It's just a matter of the buyers getting some confidence, starting to ramp this stock up. So that's one for you to put on the watch list. Wait and watch. I may be entirely wrong. I may not be. I may be entirely right. But you'll have to wait and see. So we'll just wait and see what happens with that. But Horizon is an interesting one. Next week I'm going to look at another stock which is also looking quite interesting and has come down a long way. Had some very bad news, but it's now starting to find a little bit of a buyer support, so it may be an interesting stock for you to have a look at. Okay, so that's really all I've got on the charts today. Now I want to go to my basic versus portfolio membership. What's the difference? A lot of people ask me this question all the time, so I'm going to try and make it as clear as I can today and just go through these options for you. Last week we talked about being a winner, taking that positive mindset, having confidence in your trade plan, control, all that sort of thing. This week I want to talk about the basic service versus the portfolio service, and we're going to have a little look at the building a portfolio and seeing how that looks at the end of last week. Okay, so first off, what's the difference? I've got two types of membership. One is basic, you select, premium portfolio membership, models select for you. The trading models do the work for you, okay? So I'm going to show you a bit about how that works. Okay, so firstly the basic membership. I cover around about 170 stocks. It will vary depending on the amount of stocks that qualify for my pool, and they're all broken up into trending stocks and non-trending stocks. That's what I do. I'm looking to isolate trending stocks. So what you can then do from those trending stocks that I've identified for you, that you can select from any of those stocks. Currently I've got 83 trending stocks out of the 170, okay? So each week new stocks drop in and drop out, okay? But you can buy any stocks at the moment. If they're trending higher, the chances are they'll be higher next week than this week. So let's just have a look at one of my trading centre, which is my main page on Stockradar, one trading centre sector, just to see how you can possibly use it, okay? As I said before, each week there are stocks coming in and going out, okay? So there's always new entries and new exits. But you can always look at this portfolio. So if I come in here and look at the industrial materials sector, I can see exactly what is going on. So firstly, I can see all the stocks here that are trending. Okay, all these green stocks here, and it says, yes, is this a stock pick? Yes, it is. It is a qualified stock pick. Okay, so we can see when they entered, and I haven't had any entries for a long time. The last entry I probably had was Brickworks on the 10th of the 5th at 2021 at 21.16. It's up a little bit, up about 17%, doing quite well. But this is the basic membership. This is where you decide what you want to trade. Okay, anything down here is not a stock pick and not qualified. This week we just lost Boral last Friday, the 19th of the 7th, this Monday I should say. We exited that. We accepted the offer at 7.38. We held that from September last year from $4.22, so that was a 75% profit on Boral. So we've locked that in nicely, and we just wait for something else to happen, for new stocks to come in, and there was a couple come in this week. So this is really what you're looking at here. So you really decide what you want to do, which stocks you want to trade. You can look at a chart on any of these stocks, and they're all there. So sorry, I haven't got any charts here at this stage. But with the charts on these stocks, you can see the date of entry, the price that was entered at, what the current price is, where the stop position is, and why I bought it, and any dividends available. So the most important thing is here's your trending stocks, and here is your non-trending stocks. Okay, so that's really your basic membership, and that's what you do. I sort of filter out the trending stocks for you, but then out of those stocks, you make your own mind up. Okay, now the premium portfolio membership is a little bit different. Because some people say to me, well, there's so many stocks to do, what do I do, how do I choose? So what I do is I have a controlled filtering process. I use my quant trading model to isolate stocks, so they're rated. Each time a stock comes in the Stockradar on any week, so if there's 3 stocks, they're all rated 1, 2, 3 by my quant model that says this is a stock for your portfolio and these aren't. So there's only one choice. Or maybe 2, depending on how much room you've got in your portfolio. So a quant trading model process that makes controlled and filtered selections, so it does it for you. So it's the same as a Stockradar membership, but what we do is we filter and create easy to manage 5 to 10 stock portfolios for you. So any stocks in the portfolios will also be qualified stocks in Stockradar. It's just how we filter them down to a manageable size portfolio. And you can see the results, which we'll have a look at later on. I like 5 and 10 stock portfolios. The bigger stock portfolios don't perform as well. I'm a high conviction trader. When I hit something, when something comes in, I hit it hard, and that seems to work best for me. Okay, so once I've got all my stocks, I filter, I create these 5 to 10 stock portfolios. How do I control the environment? Basically, first off, I limit the size of the universe. I minimise it down to about 100 stocks. Okay, it's not the 170, about 100 stocks. And these are the top stocks. Once your portfolio is full with 5 or 10, you can't add another one until one falls out. So that's a part of a control of the amount of stocks you hold. Okay, once one exits, you can add another one. Other filters I use are things like sector limits, market cap limits, and the other various things that I use to filter out these stocks for your portfolio. Okay. Now we're always starting at different times, so all the portfolios can be quite different. It will depend on what's coming in, what's going out. So these are what I call our energizer portfolios. The reason they're energizer, and why was my front page saying turbocharge your portfolio? Well, that's because the energizer portfolios are invariably full, because I've got a universe of 100 and I've only got a stock portfolio of 5 or maybe 10. So invariably they are full, and you are fully exposed the majority of the time, like the portfolios are now, although we now have one spare spot in our 5 stock and our 10 stock portfolio, because Boral fell out last week and we accepted the offer. Okay, so that will probably be filled up pretty quickly. So is it protected? Well, stops and risks are maintained in roughly the same manner as Stockradar stock picks. Stockradar stock picks are all about 2% risk. Okay, that's where my stops are set. So the 10 stock portfolio also carries a 2% portfolio risk in each trade. The 5 stock is a slightly more volatile, a slightly more aggressive portfolio, but the risk on each trade is still only 3%. And that is more than compensated by the upside. Okay, so risk is protected. Okay, so what are the results? And this is what you see on my homepage every week, which I update it every week, and I've run this portfolio since 2003. And since 2003, the 5 stock portfolio has generated a compound annual growth rate of 20%. The 10 stock portfolio has a compound annual growth rate of 15%. And as I go down, as the portfolios get larger, those returns will get smaller. Okay, So that's really how the portfolios work. If you do have any other questions, more specific questions, feel free to give me a call or send me an email. But that's the difference. You really choose in the basic membership what stocks you want to choose. The portfolio membership will isolate those stocks for you. So every Monday or Sunday night, you will get an email from me saying, this is the one for your portfolio. Okay, the trading model is selected. Okay, so premium portfolio membership. All you do is execute with your online broker. That's it. All cash and stock holdings remain in your name. I'm not interested in holding any stocks or any cash. It's all done in your name. All I'm doing is giving you the qualified entries and exits from my trading model. Okay? Takes just 15 minutes a week just to put on your trade, enter it into our share trade tracker, and you're done for the week. And you can go and play golf, tennis, whatever you want to do. So the portfolio membership is low cost, price of a subscription all, and a bit of online broking costs. It's safe because it's managed, it's protected, it's simple to understand, and it's also very easy to manage. Okay, so that is the portfolio. So if you have any questions regarding that, give me a call, but that's how the premium portfolio works. It's a very simple process at the moment. Okay, now, just a quick snapshot of the portfolio again that we've been looking at over the last few weeks. Building the portfolio, we have been doing that. None of these stocks have fallen out. We had one fall out at the start, if you might remember. JB Hi-Fi fell out. We took a 15% hit on that. Okay, but since then, these stocks, Independence, Adelaide, Brighton, Mineral Resources, Washington Soul Patterson, and Computershare have all been stocks that have held in the portfolio. And you can see currently what they are. The portfolio as a whole is up roughly about 12%. Okay, you can start this at any time. Okay, and this 5-stock portfolio was started in March 2021. Now, as I said before, this is a really good period in the market, and now's a good time to make money. It's not always like that. Okay, the stock markets are difficult times, and so you can have downtrends, you can have sideways trends, you can have choppy trends, but these trends, like we've got now, are excellent to follow. So this portfolio is thus doing very well. This is updated as of the 23rd of the 7th, 2021. Okay, so that's the portfolio, the basic membership for you, and that's our little portfolio we'll build. We'll keep an eye on this portfolio every few weeks. I'll update it for you, and we can have a look at it for you. So this week, a controlled weekly process, because I'm a weekly trader. I don't do anything during the week. A controlled process simplifies trading, leaving decision-making a clear, simple, and easy process. No more doubt, headaches, or stress. Just pure enjoyment, as stock market trading should be. Don't wonder anymore, just focus on what you do. Have your strategy and shoot for it. And don't worry about anything else. So good luck for the trading week. Thanks for listening. I hope you all learned something this week, and I'll see you all next week. Thanks very much.